Hello, and welcome back to the channel. I'm Algabot, and this is where we take apart automated trading strategies for MetaTrader 5 and study exactly how they think. Today we're looking at a strategy called Fractal Adaptive Trend Glide. It's a trend-following expert advisor built around John Eller's Fractal Adaptive Moving Average, often shortened to FRAMA. By the end of this video, you'll understand how it measures the shape of price, how it decides when a market is genuinely trending, and how it times its entries and exits with an adaptive line. Everything here is educational only, so let's get started. So what does this expert advisor actually do? At its heart, Fractal Adaptive Trend Glide follows trends using a single, clever indicator, the Fractal Adaptive Moving Average. Most moving averages use a fixed smoothing speed. FRAMA is different. It looks at the recent price path and asks a geometric question: how jagged is this movement? It answers that with a number called the fractal dimension. Think of it this way. If price is traveling in a clean, one-directional line, its path is almost straight, and the fractal dimension sits near 1. If price is chopping back and forth, filling up the whole box of the chart with noise, the path becomes space-filling, and the dimension climbs toward 2. FRAMA measures this from the high and low ranges of the recent bars, and then it uses that measurement in 2 ways at once. First, the dimension controls how fast the adaptive line reacts. When the market trends, the line snaps close to price and glides along with the move. When the market chops, the same line flattens out and deliberately ignores the noise. That flattening is the whole point, because it's the choppy, sideways conditions that tend to trip up ordinary moving average systems. Second, the dimension doubles as a filter. The strategy only takes trades when the dimension confirms a trending regime, and it stands aside when the path looks too jagged. So the same measurement that shapes the line also decides whether the environment is worth trading at all. This approach is designed for markets that produce sustained directional moves. Think foreign exchange pairs, metals, or index charts. It was conceived with the 15-minute through 4-hour time frames in mind. But the time frame is chosen when you run the backtest, not fixed in the code. It's best suited to a patient, trend-following style of trader who is comfortable waiting for the market to line up, rather than someone hunting constant activity. Remember, all trading carries risk, and losing trades are a normal part of any strategy. Let's walk through the logic step by step, exactly as the EA runs it on each completed bar. First, the strategy builds the fractal dimension. It takes the FRAMA window, 16 bars by default, and splits it into 2 equal halves. It measures the high-to-low range of the recent half, the range of the older half, and the range of the whole window. From those 3 ranges, it computes the dimension using a logarithm formula and clamps the result between 1 and 2. A value near 1 signals a straight, directional path. A value near 2 signals space-filling chop. Next, that dimension is turned into a smoothing constant called alpha, using an exponential formula. A low dimension pushes alpha toward 1, so the adaptive line reacts quickly and hugs price. A high dimension pushes alpha toward 0, so the line barely moves. The new FRAMA value is simply alpha times the close, plus 1 minus alpha times the previous FRAMA. That's how the line advances by 1 bar each time. Now the entry conditions. For a long trade, 3 things must all be true on the just closed bar. 1. The close must have crossed up through FRAMA, meaning the previous close was at or below the line and the current close is now above it. 2. The FRAMA line must be rising, measured over the slow ploopback of 3 bars. And 3. The fractal dimension must be at or below the maximum dimension setting, which defaults to 1.6. That third condition is the regime gate. It confirms the market is trending, not just noisy. A short trade is the exact mirror. The close must cross down through FRAMA. The line must be falling over the same look back, and the dimension must still sit within the trending limit. Risk is handled with the average true range. When a long fires, the stop loss is placed below entry at 2 times ATR, and the take profit above entry at 3.2 times ATR. For a short, those distances flip to the other side. With the default multipliers, that's a reward-to-risk ratio of 1.6 to 1. The EA holds only 1 position per magic number at a time, so it never stacks trades on the same signal. Let's read through the MetaEditor code on screen. At the top are the inputs that shape the strategy. FRamaPeriod, defaulting to 16, is the window for both the adaptive line and the fractal dimension. Slope loopback of 3 sets how many bars back we measure the line's slope. MaxDimension at 1.6 is the regime gate. Then AtrPeriod of 14, with stop and target multipliers of 2.0 and 3.2, defines the risk model, and lot sets the fixed trade size. Below the inputs is the decision block. The variables trend up and trend down compare the current FRAMA to its value a few bars back, telling us which way the line is sloping. Then cross-up checks that the previous close was at or below the line, while the current close is now above it. A fresh upward cross. Cross-down is the mirror. Previous close at or above the line. Current close now below. A long setup requires both a rising line and an upward cross, and the dimension gate has already been checked above this point. A short setup requires a falling line and a downward cross. Whichever fires, the code calls try-enter. Now look at the 2 order blocks. For a buy, the price is the ask, the stop loss is set at ATR times the stop multiplier below entry, and the take profit at ATR times the target multiplier above entry, before calling trade.buy. For a sell, the price is the bid, and those 2 distances simply flip sides before calling trade.sell. Both sides are symmetric and fully ATR-driven. Let's walk through this illustration candle by candle, and watch how the blue adaptive line, that's FRAMA, shapes both a long and a short trade. Notice there's no separate panel underneath. That's because FRAMA is a price overlay indicator. It lives right on the candles. Look at the first 3 candles on the left. Price is drifting gently lower and closing below the adaptive line. During this stretch, the fractal dimension is fairly high, so FRAMA is almost flat, sitting quietly above price. This is exactly the kind of indecisive, sideways behavior the strategy is designed to sit out. Nothing triggers here. Now watch the 4th candle. Price snaps upward, and its close pushes above the flat adaptive line for the first time. That's the fresh upward cross the strategy waits for. The prior close was at or below FRAMA, and this close is now above it. The line itself is beginning to tilt higher, confirming a rising slope, and the dimension has dropped into the trending zone at or below 1.6. All 3 conditions line up, and the buy entry marker prints. From there, follow the next few candles as they step higher, one after another. This is the glide the strategy is named for. FRAMA speeds up and rides just beneath price, hugging the move because the low dimension has pushed the smoothing constant toward 1. The stop loss sits below entry at 2 times ATR, giving the trade room to breathe. As price stretches into the 7th candle, it reaches the take profit target, placed at 3.2 times ATR above entry. That's the reward to risk of 1.6 to 1 being realized on the chart. Now the character of the market changes. Around the 8th and 9th candles, price stalls at the top and begins to roll over, and you can see the adaptive line curl and start tilting down. On the 10th candle, price closes back below FRAMA, the mirror image of our entry. The previous close was above the line. This close is below it. The line is now falling, and the dimension still confirms a directional regime. That's the downward cross, and the sell entry marker appears. Watch the final candles glide lower in an orderly step down. Just as before, FRAMA rides just above price, tracking the decline. The stop loss is placed above entry this time, and the take profit sits below. As price presses into the last candle, it reaches that downside take profit target, completing the short. So across this single chart, you've seen the whole idea. The adaptive line stays quiet and flat when price chops, then wakes up and glides with the market once a genuine trend forms. First up into the buy, then down into the sell, with every stop and target sized by volatility. Of course, not every signal plays out this cleanly, and losing trades are a normal part of trading any strategy like this one. So that's fractal adaptive trend glide. We covered how FRAMA measures the fractal dimension of the recent price path, how that dimension both speeds up the adaptive line and gates the trades, and how a fresh close cross of a rising or falling line triggers the entries. We also walked through the ATR-based stops and targets and read the key parts of the MetaTrader code. Please remember that everything in this video is educational information only. It is not financial advice, not a recommendation, and not a solicitation to trade. Every strategy carries risk, and losing trades happen. Always test thoroughly and understand a system before considering it, in any live setting. If you found this breakdown helpful, please like the video, leave a comment with strategies you'd like me to analyze next, and subscribe for more MT5 walkthroughs. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.